What's up, everyone? It's Scotty with Money Investing. Welcome on board for yet another Market Open live stream here. Uh, just want to make sure that the audio and the video is working well. So let me know in the live chat if everything is working well. Just give me a thumbs up. And once again, good morning, everyone. I feel like we are just typing hello and good morning. Those are the only two words we are typing right now in the live chat. But again, thank you so much for joining. The QQQ ETF has recovered a little bit. So far it is still down about 0.5%, but we were much lower earlier, and we had the SPY ETF down much more, closer to 1.5, closer to 2%. But right now it's only down 23 basis points, and the Dow Jones is only down about 44 basis points right now, so just under $340. So once again, thank you so much for joining. We did a live stream about a couple hours ago, and we just went over the futures market. We calculated some fair price, fair values for certain stocks, and just wanted to kind of go live and kind of look at the markets, look at the energy sector, look at the volatility, look at some of the stocks that are moving. A lot of companies actually did report their earnings as well, so we'll break that down here very shortly. But this right here is how pre-market looks like. So obviously we've seen energy stocks, take off very nicely. So Devon Energy, we got Hess Corporation, we got Marathon Petroleum, Valero, we got Chevron, Exxon, Energy Transfers. A lot of companies are just pushing higher, specifically in the energy sector, because oil prices are obviously much higher. And then all the other sectors, all the other stocks are pretty much down here. Disney's pulling back a little bit, close to 1%, and then Kimberly-Clark, PayPal, CVS, we got Royal Caribbean, Apple, Amazon, you name it, all companies starting to pull back. So this right here is gonna be the actual earnings. And by the way, Caddy, what application is this? So this is the Webull platform. The Webull, sort of like the brokerage that I use also, and then this is the TradingView platform. So they're both very helpful, and those are pretty much the ones that I use. But this right here are all the earnings, right? So we had Home Depot and Macy's report pre-market, and then after the bell, we've got Cathie Wood's big holding in Teladoc. They're reporting numbers, along with Virgin Galactic and Palo Alto Networks. And Realty Income Corp also reports numbers after the bell today, so that should be exciting here as well. So which one is better, Webull or TradingView? Really depends what you're looking to do. If you're looking for a brokerage, then Webull is better, because TradingView doesn't allow you to actually trade off of their platforms. They've only got like limited actual trading panels that you can connect to. So there's a few that I'm not familiar with, like TradeStation and some of these ones that you can use, but I've never traded with TradingView. I mostly use it for charting purposes. It's got better charting software in my opinion, but Webull gets the job done when it comes to trading, like investing and just options trading. For us, so brokerage wise, definitely Webull, but charting software wise, looking at the actual candlesticks patterns, moving averages, sort of including your indicators, all that stuff, TradingView is much better in my opinion. So and again, later this week, we got Fubo, Skills, Hertz, Clover Health, eBay, Lemonade, Overstock, Lowe's, Alibaba, Square, Coinbase, Etsy, a lot of those companies reporting numbers. And today we've also got consumer confidence that comes out at 10 a.m. Eastern. So very important. Later this week, we've got GDP numbers coming out on Thursday, and then Friday we've got the personal consumption expenditure. So PCE is also going to be out. So Ranjit says, I slept during the last live, and you are here again. So you slept during the last live stream, or when I was done, and then you're back? Because if you slept during my live stream, that means I was very boring to begin with. So, but anyway, U.S. stock futures on Tuesday erased much of the sharp overnight losses, and investors tried to figure out whether Russia will invade Ukraine. And one day after Moscow recognized independence of breakaway regions, and the UK on Tuesday announced targeted economic sanctions against 5 Russian banks and 3 wealthy individuals, and U.S. sanctions are also expected as the country is basically starting to move in on some of the eastern parts of Ukraine. And as a result, oil prices obviously jumped 3.5% to almost $99 per barrel. That's the level that we hit. And on a 10-year Treasury note, fell to 1.94% as bond prices went up. The yields came down a little bit, and Bitcoin also dropped down to 37,700. And UK hits Russia with sanctions ahead of expected US punitive measures as well. And this is just sort of like the breakdown of the sanctions as well. Germany said Tuesday it'll halt certification of Nord Stream 2 pipeline designed to bring natural gas from Russia directly to Europe. And the Germany's chancellor said his country won't accept recognition of the two self-proclaimed pro-Russian separatist regions in Ukraine. And addressing lawmakers Tuesday, UK Prime Minister Boris Johnson said the first tranche of sanctions would target all these banks. And the United Nations Security Council also had an emergency meeting in New York, kind of addressing these escalating fears between Russia and Ukraine. So that is pretty much in headlines all over the place right now. This is what's driving the markets right now at the moment, which is the geopolitical tensions, which we have covered a lot. So Home Depot. Okay, so Abdullah says, I use it for trade with TradeStation. So I've actually never had experience with TradeStation. So let me know if it's actually good. If you like that broker, what are some of the pros and cons? Feel free to kind of share that with us. We'll definitely look into that in more detail. But I've personally never used a TradeStation. Home Depot. So the home improvement retailer stock rose 1%. They reported $3.21 in EPS, 3 cents above expectations, and the comparable store sales also beat expectations. And they also announced a 15% dividend increase, which is very good. And Macy's also beat estimates by 45 cents per share to $2.45. And revenue came in, revenue doesn't say, but authorized a new $2 billion share buyback program and announced a 5% dividend increase. The stock rallied over 7.9% pre-market right now. And SoFi is announcing a deal to buy banking software, whatever this name is, Technisys, for about a $1.1 billion stock, saying the additional will generate up to $800 million in additional revenue through 2025. And SoFi fell 2.7% in pre-market trading right now. And then we got DraftKings down because the company got downgraded by Wells Fargo, and they basically put a equal weight rating from a overweight rating and cut the price target to $19 from $41. That's a big cut. That's like over a 50% cut on DraftKings. And this was a concern that I also pointed out during the video that I put out over the weekend, which Wells Fargo is concerned with the company's path to profitability given the pace of the increase in expenses. So one of the things that we did point out is the operating expenses, right? The company's got a pretty hefty bill when it comes to marketing, salaries and wages and advertising costs. All that is really eating into the profitability of the company. But this is, again, I want to be very clear, this is a very short-sighted concern because as the company gains more user bases, brings on more people into the ecosystem, their average revenue per user is also going up. Eventually, their path to profitability is there. It's just not in the short term. It's over the long term where the company should be expected to become profitable. But going over some upgrades and downgrades here. So Goldman Sachs adds a Datadog to the conviction buy list. We got Morgan Stanley reiterating Best Buy as equal weight. Bernstein upgrades AMD to outperform from market perform and said that this is downright attractive for the stock price right now. HSBC reiterates Meta Platforms as hold and lowered the price target from $300 down to $225. Come on, I mean $225. That's your price target 12 months out for this company. But they essentially said that there was a collection of warning signs leading to a drastic fall in share price. And the company reported a 4.1% miss on operating profit versus consensus with no subscriber growth coupled with a cautious outlook for 2022. So big downgrade here for Meta Platforms. Again, Wells Fargo downgrades DraftKings, which we just went over, and Piper Sandler reiterates Coinbase as overweight as well. And then JP Morgan upgrades Okta to market perform for market perform. So pretty much no changes there. And we got Bank of America reiterating NVIDIA as a top pick, and they also reiterated Salesforce as a top pick. And Morgan Stanley reiterates Walmart as overweight, lowered its price target to 165. And we've got the Williams trading downgrades Nike to hold from a buy. So those are all the upgrades and downgrades. Let's just switch back over to the market. So is the volume okay? I just want to make sure that it's not too soft or too low. Maybe try like turning up the volume, or if it's on my end, I'm happy to turn it up as well. But I just want to check if the volume is okay, or if I need to like speak up a little bit, if everybody can hear me. So that's that. Let's take a look at the volatility here. So the VIX is up over 6%, although we have been selling off. So we did get tagged at over 31, almost 32 levels. So okay, volume is okay, volume is good, but volume is low. So yeah, I'm gonna speak up a little bit. So I'll probably start shouting at this point. We'll speak louder. But Volatility, like I was saying, it was up to 32. Obviously, it's been coming down a little bit, still up over 6%. And as a result, the markets have validated this support very nicely, especially the QQQs, right? So if you come over to the Nasdaq ETF, we perfectly got a bounce back higher from that $334 support. So again, it's going to be very interesting, and perhaps today is going to be very, very decisive from a technical standpoint. Obviously, we're going to learn more about the economic policy in March when the actual FOMC meeting happens on March 16th. But from a technical standpoint, this is where the bulls and the bears are going to battle it out at 334, right? This is pretty much the Russia-Ukraine situation right now, which is where either we see like a breakdown below 334 and the bears really put a lot of pressure, or if the bulls can hold that level and we continue to kind of push higher and eventually break out outside of this descending triangle, because we have been making lower highs while the support is roughly at around $334. So there is going to be a resistance to watch at 356. That's the level that I'm watching here from a resistance standpoint. That will allow us to kind of shift our direction back to higher highs and higher lows. But of course, if you see a breakdown below 334, then that will be a little bit alarming from a technical standpoint, because that could cause some more breakdowns for a lot of companies. So Eric says you need a better mic. Yes, I do think I need a better mic. I definitely do. And we'll see if I can get one very soon and have that connected. I like to keep as little equipment with me as possible, because it allows me to like just grab my computer and be able to do this from anywhere. But of course, I can't carry the light or the mic or everything else with me everywhere. So I do apologize. But let's just do like a quick market poll. So markets today, and I want to hear from you guys and what you guys are thinking for today in terms of markets. So I'll put red, green, and flat, and the poll is out. So you guys can vote, and we'll see what everybody has to say and where the sentiment is from the markets right now. So Virgin Galactic ahead of the earnings, down a little bit over 3%. Teladoc ahead of the earnings is down another 1.77%. Friday, pretty big sell-off here, down over 7.7%. But Macy's, as mentioned in the article, is up a little bit over 4.8, almost 5%, just under $27. And Home Depot is down 3.3% after reporting some good numbers. They are pulling back. So Intel is coming down to just under $45. It is testing support, so it should be very interesting for us to, again, keep a close eye on Intel, where it kind of bounces off of, because if you are looking for a trade, or if you're even looking for accumulating more Intel, in my opinion, fundamentals are lined up. The only problem is the company doesn't quite have a very, very strong growth prospect over the next few years, right? So they're going to be spending a ton of money on infrastructure and building out their manufacturing. But at the same time, it's got very, very sort of low valuation. Technically speaking, lots of demand and big support inside this green rectangle, sitting anywhere between $40 to $45 per share. So the lower it gets around these levels, I think the better the risk-reward trade-off becomes for Intel around at these prices. So Stefan says, surely Virgin Galactic has another 40% down to go. This is a terrible, terrible company. Yeah, I mean, the only problem I saw with Virgin Galactic, it's very, very niched product, right? So execution and being able to kind of scale their business are some of the things that aren't quite there for Virgin Galactic. We'll see if that ever changes in the future, but right now, yeah, I'm definitely staying away. So that's that, and let's take a look at the yields here. So we got the 10 and the 20, 10 and the 2-year spread trading at 42 basis points. This number has been fluctuating at around 40 basis points. The difference between the 30 and the 10 at just over 31 basis points, and the difference between the 10 and the 3-month is at just over 1.76. It's been kind of flattening out. We were seeing some pressures of it selling off and pulling back down, but right now it's just consolidating sideways. This is what's really been selling off, is the 10 versus the 2-year. And this, of course, is our big chart that we always like to focus on and really understand where the money is flowing to. And energy, as we talked about earlier, has been the big gainer so far this year. Gold and silver are still doing okay. I mean, on the year, they're up over 4.5%, 5.5% each. But everything under sort of this line is red, right? So if you take a look at everything over here, all of this is red on the year. So this is all red, and all of this over here is green. So of course, energy is green the most, followed by gold, followed by silver. Yields are obviously up, But then you got your staples, your industrial, your utilities, healthcares, S&P, NASDAQ, Bitcoin, Ethereum, biotech, discretionaries, tech, everything is straight up down on 2022. All right, so 67% people expect the markets are going to be red, 21% green, and 12% expect the markets to be flat. So that should be interesting. Definitely, markets in general leaning more towards sentiment-wise. You guys are leaning more towards being a red day, and that makes sense because there's a lot of uncertainty. There's a lot of fears, in the markets from a geopolitical standpoint, and of course, interest rates, inflation. We haven't heard anything from that front yet. We'll hear about it in March, and once March begins, obviously they'll have a lot of data to go over because not only we have inflation numbers from February. We'll also have unemployment numbers and inflation numbers from March because the first Friday of March is actually going to be, is it going to be this? It's not going to be this week. So next week on the 4th is when unemployment numbers are going to come out. And I think inflation comes out the week after that. So they're going to have a lot of things to work with when they decide how much to raise interest rates by. I don't think the question now is if they should be increasing interest rates because they certainly should be, but how much are they going to raise rates by is a real question. All right, so let's take a look at some of the individual companies. We've already talked about plenty of them in our previous live streams, but we'll take a look at it again. So Tesla, let's see how much progress we've made. Down still about 2.5%. And this is the overall downtrending channel for the company right now. So just lower highs and lower lows being formed. 850 is going to be that next resistance support level all the way down to $785. So Vitruvius says, wouldn't the conflict with Russia drive oil prices up, which consequently would have a strong impact on inflation? Yes, absolutely, you're right. Because that's obviously affecting commodities. So it's a indirect impact on equities right now. So the geopolitical tension between Russia and Ukraine is mostly affecting commodity prices, right? And more specifically, oil. So obviously we're getting up to $94 for WTI. Brent's trading at just under $90 a barrel. If you look at some of the other ones, gold, silver, obviously been affected. They've been pushing higher. In fact, since September 2021, gold is up over 10.7%. Silver has been bouncing off this support from $21, $22 per ounce. It's up a little bit over 10% as well. And then palladium, right? Palladium is another sort of commodity from December. At 1500, this thing has gone up 58%, 59%. So it's affecting commodity prices, and that as a result is moving up inflation expectations, which as a result will move up interest rate expectations, and that as a result affects equity prices, right? Valuations in general, which are actually will have to be revised to the downside as interest rates go up. So that's really what's affecting the markets from an indirect standpoint. But if we see any type of de-escalation on those geopolitical tensions, then yes, the markets could start to price that in, and we should see some more upside in the markets right now. So, all right, so getting in the market, can you also check value companies? I think a lot of people don't know what value companies are great. Microsoft, Google, Apple, etc., but no oil, energy companies. Yeah, absolutely. We can definitely focus more on value companies too. If you have any suggestions, I'm happy to go over those. But I think, value company, value company and growth company really is the only difference is the growth rate and revenues, right? So there's obviously Intel, I can put definitely in the value side, right? It's a value company because it's not really growing revenues all that much. But I think a much better emphasis needs to be on the valuation and not like a separation between growth and value, right? Because if you can find a great company, a great stock that's growing at a very nice pace, but you can get it at a reasonable valuation at a lower price, then I think that's a great deal in the markets, right? Regardless of whether it's a value or a growth stock, right? So I don't think there has to be like a separation. If you can find a great asset in the market at a lower price, that's a great deal, right? I think the valuation is the main focus here, and you don't want to overpay for that company. That's the whole point, right? You don't want to overpay from a price to earnings, price to sales, price to free cash flow, all those multiple standpoint. You want to be sort of conscious about how much you're paying for that value that you're getting. So I think all companies can be obviously separated into different sort of segments, whether it's a value or a growth, but all it comes down to is the valuation, right? How much you're paying for that company. So you can definitely buy a value company at a great price. You can definitely buy a great growth company at a great price as well, and you can definitely overpay for these companies as well, right? You can overpay for Intel, you can overpay for Walgreens, you can overpay for value stocks as well. So Venkat, yes, I'll get back to you on Discord here shortly. So when did you send me a message? But I'll definitely get back to you as soon as possible, right after the live stream. So all right. All right, let's just open up our 4 split screens here as well so we can pull up some charts for individual companies. All right, so we're going to keep this on NVIDIA. We'll keep Advanced Micro Devices here. We'll keep Tesla. AMD, by the way, pushing up close to 1% on that upgrade today, right? So which was the bank that upgraded AMD? Bernstein. So moving up on a nice upgrade today. We've got Palantir down close to 4% again, trading at just under $10.75, just under $11 once again. And really the support is going to be at 1050. This right here is going to be the level to watch for Palantir. So NVIDIA, can we expect 200? I think so. I think we can. I think we can certainly expect $200 on NVIDIA. What is my dividend or value stock besides Walgreens and O? So I also have JP Morgan, but I have plans of actually buying possibly some other companies too. I just need to do like a proper research and analysis on them. I do like AbbVie, Lockheed Martin. Those are 2 that I'm looking into now. And then even AT&T, I feel like it's trading at a very, very low price. I just have to do some more research on that company to see whether after the spinoff it's going to be worth buying or not, because their dividend yield will be much lower. So the ones that I'm really looking at is going to be AT&T to add to the dividend portfolio. AT&T, then AbbVie, Lockheed Martin, possibly even 3M, and then Intel. So those are 4 or 5 companies that I'm really considering from a dividend/value standpoint going forward. Oh, Chirag says, I have an interview with AT&T today. Good luck. All the best. Hope you kill it in the interview. So, yeah, hope you do well. So yeah, I'll definitely be looking into AT&T, and probably will do a video very soon, because it's got a nice, decent dividend yield. Price hasn't moved much, so very, very low volatility stock, low beta stock. And yes, ZIM as well, ZIM. We'll definitely do that one because it's got a very nice dividend yield. All right, so less than 40 seconds left. We got 70% now tilted more towards red, and under 20% expect the markets to be green. So definitely more towards having a red day than green. And we'll quickly switch over to our indices here, and we'll see what the markets have for us today to start and finish the last week of February 2022. Yes, so I'll go over Adobe here shortly. I do like Adobe as a business, very, very sticky business, high retention rate, great margins, great growth, but trades at a higher multiples. So, the P multiple, the price sales is definitely high for the company. So that is something to consider for Adobe, but I'll definitely take a look. And I think they report earnings here very soon. I think either later today, later this week, or in March, I think is when they report. All right, off we go. Let's see where we end up on the day. So Tesla getting a nice move higher. First minute here, back over 841. And AMD is now up over 2%, back over $116. And there's no particular stock that is like down the most, right? There's nothing that's like super, super red as what we have seen over the last several weeks. There's always been one stock 20% more down over the last several weeks as more and more companies have reported earnings, but now it's kind of like cooled off. Alibaba, however, is still down over 4%. So if you come over to Alibaba, we are pulling back down to 114 again. Very, very strong support. I feel like there's a lot of buyers sitting right here for Alibaba, roughly in the 105, 110 area. Every time we've gone down to that level, buyers have stepped up for Alibaba. So triple bottom here for the company. So, if that could be very well a very strong support here for Alibaba. So 114 DWAC, Digital World Acquisition. Lots of people talking about that, up close to 10%. So very, very nice move. I don't know who they're actually acquiring, or I don't know who they're actually buying right now, but this thing is up over 79% year to date right now. So NASDAQ still down 66 basis points, S&P down 38, the Dow Jones down about 0.5%, with Tesla, very, very nice move right at the open, just under $845. So Marathon down close to 3.5%. Obviously, with Bitcoin coming down, Marathon at some point was down over 10%. And right now, it's just definitely been bought up a little bit. SoFi under $11 right now. So SoFi once again coming down after they announced the deal to buy a software for close to 1.1 billion. So the market doesn't seem to like that right now. Let's see how Meta is doing. So Meta, $202, still down about 1.66%. So really struggling. I mean, if you think about these stocks and where they actually fell down to, I mean, PayPal was at 132 after the earnings, and it's gone down another 23% after the earnings came out. So you can just see, how much the analysts completely downgraded the stock to a point where they just there was so much selling pressure, right? So even after the earnings, I mean, it was at 132, now it's at $100, like literally just over $100. Same thing with Facebook. After earnings, it fell a little bit over 26%, and from those levels, it's down another close to 15%. So a very, very strong move to the downside here for FB as well. Amazon, yeah, Amazon's got a nice little gap here, 2,900. It's very much possible. Wouldn't be surprised if we do get down there. And the support levels all the way are going to be down to $2,715, $2,700 for Amazon. So if you could research Twilio, Datadog, and DigitalOcean. Okay, I'll add those to the list and see if you can actually research those and put out videos for those companies. So S&P now starting to sell off. NASDAQ also. And Dow Jones on a big drop here, down close to over 320 points. What's dropping the Dow? Home Depot. So Home Depot and Boeing. By the way, I was actually checking out this documentary on Boeing. Forgot what it's called, on Netflix. I actually started watching that today. I figured it'd be insightful on the company and just give us some more information, but of course mostly for entertainment. It's called Downfall. Downfall. I don't know if anybody's seen it, but I actually started watching it a little bit today. Might complete it sometime this week, but it's on Boeing specifically. So we'll definitely, yeah. Tom says Downfall. So yeah, we'll probably watch it and see how it is. Yeah. So volatility pushing back higher. So, this is the 4-hour chart. This is a 4-hour candle now that just started at 7 a.m. It looks like. Yeah, kind of weird. 3:10 is when it opened, and then 7 a.m. So right now it's up over 9.5%. Back over to 30 levels. So volatility pushing up, and as a result, we got the NASDAQ and the S&P and the Dow starting to kind of once again pull back here. Well, we're making pretty much new low of days right now for the markets. This is the chart. This is where we are right now on the 4-hour basis. 334. That's what we need to hold up for the market. So 5-minute charts, if you go over, that's 334 level is. So we got a perfect validation at that support, right? So you'll notice that we gapped down, we consolidated sideways, and the buyers stepped in so aggressively. So this is pre-market, right? So we came back up and then we consolidated sideways for a really long time. We weren't able to successfully kind of break out over this sort of range of $340. And this is like the 5-minute chart that I'm showing you guys. And 334, like I said, was this buying pressure here. We opened, so we gapped down, push higher, and then lots of consolidation in between this range. So, and you'll notice now NASDAQ getting bought up here at this support, this lower range of this sort of consolidation pattern. So resistance intraday is going to be this, which is sitting at 340. So we'll see if 340 breaks right now for the markets, or QQQs specifically. What do you guys think? Which way are we breaking out to? Which way are we breaking? Are we breaking to the downside, or are we going to have the bulls break us up to the upside here? What do you guys think? Quick, quick, quick. I need quick answers. Otherwise, the markets will already be there. So lots of people are saying down, down, down. Siren says up. So Sabine says, what's the point to invest if things are still going down? That's a great question. It really depends on the company. I feel like a lot of companies that are trading at your sort of buy levels and you think the valuations are cheap enough, then it doesn't really matter where the markets are, where the overall markets are. If you believe that the companies you want to own for the long term are trading at low prices, you couldn't even care less about the day-to-day fluctuations in the markets, right? You go there and dollar cost average on those companies. Like this morning, this pre-market, I picked up shares, right? I had a lot of buy orders go out, and I just wanted to kind of dollar cost average into some of the companies that I want to hold for the long term. Doesn't really matter where the market goes. In the short term, I'm okay holding it for the next 5 years, 7 years, my time horizon out that much in the future. So, if I like that price, if I like the valuation, I'm okay kind of holding it. So that's that. Let's take a look at SPY 2. Let's see how SPY has been consolidating. So SPY already had a breakdown sort of below this support. So we were kind of going back and forth here with this support, and then there was some type of resistance coming in over here. And obviously we saw a big breakdown below this level. Very, very similar pattern for SPY as well. So lots of consolidation, big rally, consolidation here, and then a big breakdown back down for SPY. So we'll keep a close eye on QQQs and see where we actually break out to. Yeah, so Dennis says is right. I think he's on point. These prices are great depending on how long a perspective you have on a particular company. If you're looking for immediate instant gratification, then good luck. Yeah, definitely. I mean, the short-term markets are very, very weak, right? We have to find a proper trend reversal, down about 1.5%. AMD is up close to 2%. Tesla giving up on most of those gains the first 5 minutes. Palantir, however, back just under $11 right now, up down just over 74 basis points. So pushing higher, seeing some buyers kind of step in for the markets. I'm just really interested to see where we actually break out to right now for our QQQs before we jump into any other patterns. So this is going to be on the day, we're looking at the 5-minute charts on the indices, but this is going to be the 5-minute chart on the QQQs to see which way we actually break out to. So VOO, Meta to 193 gap. So Facebook. So yeah, I mean, we've got a big gap to fill up there as well. But 193. Well, it's also got a gap all the way on 158, 160 levels. And it's got a tiny gap, 188, 190. It's got a gap that it's filling now in the 200s. So yeah, Facebook's obviously got a lot of gaps here to fill back and forth, but we are right now pushing back higher, back over $255 per share. So this is the third 5-minute candle for the QQQs, and we'll see if we actually do break to the upside. So 339.80 is where we're getting our alert on for the NASDAQ. Yeah, so current brings up a great point. I think there's a lot of sanctions being put on Russia. Oil prices are obviously under a lot of pressure with the cap on supply. OPEC obviously being very reluctant to raise supply, and as a result, the demand obviously is coming in, pushing the prices higher. So yeah, I mean, there's a lot of headwinds for the markets. Fully agree. In the short term, there's a lot of headwinds for the markets that we need to clear up. I think the moment we see any form of de-escalation with this geopolitical tension from Russia and Ukraine, so it's like the markets are just focusing on that one thing right now, right? Everybody's focus is on that one thing, and as soon as it starts to kind of de-escalate, then we're gonna turn our heads over to the Fed, right? As soon as March rolls over, then it's all gonna be like the FOMC meeting. What's gonna happen with interest rates? Where's the yields going? Where's inflation? How are they gonna combat inflation? And that's gonna be the narrative. So once those two issues, I feel like those are more macro issues. When those are under control, right? Then there's going to be a much clearer sort of, that's going to become a tailwind for the company, and as a result, we could see some more potential upside towards the back half of the year for the markets in general, right? Inflation should also start to peak and then start to kind of curve back down towards the back half. So QQQ pushing past over 340. So it looks like we're starting to see some buyers really step in and breaking out over $340. Now the real question is this going to hold, or if you're going to roll back down, as we have over several times in the last several weeks, right? This has been the overall trend, just downtrend, right? Downtrend, so much selling pressure, just downtrend over here as well. Lots of selling pressure, downtrend. So it really depends where we close. Obviously, intraday can have a big breakout, but can we hold those levels, right? That's a big test for the bulls, really. And it's really interesting that 334 continues to be a very strong support for the bulls, right? We're just getting bought up every time we come down to 334. January 24th was no different. We came all the way down to that level. That was a reasonable green day. Markets were up 46 basis points. We consolidated sideways for a few days, and then boom, another rally, short rally for the Nasdaq, right? We jumped over 8.5%, which is actually decent for the Nasdaq. And then of course we continued on that downtrend even further. So let's take a look at stocks here. So AMD is up over 2.5%. Nvidia almost breaking even on the day. We got Tesla, only down 2%, and Palantir is pretty much break even on the day as well. Upstart's up over 1.7%. Very, very strong move. Roku is up over 6%. So very nice move for Roku. Fiverr's up over 2%. Pinterest, DraftKings doing really well even after that downgrade. That is good. Facebook almost broke even here. And DraftKings getting a lot of buyers kind of stepped up here for the company. Vertex is up 0.5%. And how is PayPal doing? PayPal pretty much flat, just under $104. So yeah, we'll keep a close eye on this and see how the markets do over the next sort of several days and where the overall trend goes. We got a much important resistance at 356, right? Getting up to 356 is going to be a bit of a challenge for the market. So that is actually not that bad. It's only 5% away for the Nasdaq, right? In order for us to see some real improvement in the Nasdaq, that's going to be kind of like a trend reversal from a technical standpoint, right? That's going to be our first higher high once again for the markets, because that was the last high that we tested on the daily chart and we broke down. So Kathy Wood is buying DraftKings and Roku. So yeah, I mean, she's been very, very long on Roku and DraftKings, but her real play is going to be on Teladoc. That's going to be the real question if Teladoc reports good numbers, because most of her plays have just been getting hit hard. So that should be very, very important for her, because what's been happening is that she's been selling some of the stocks, and what is she consolidating into? Teladoc and Roku, some of those companies. So they need to really perform in order for her fund to stay alive, in other words. So Overstock, OTSK, I believe, or no, OSTK. Yep. Cyril says Teladoc to get wrecked tomorrow. That has unfortunately been the case with a lot of Kathy Wood stocks. So we'll see, where it ends up after the bell. But this right here is going to be Overstock. So earnings expectations, 29 cents, with revenues coming just over $643 million. So market caps at 1.7 billion. annually. We've seen some decent revenue growth. It kind of feels like the pandemic really helped them a lot. So online shopping, commercial sites. That's that's obviously, that makes sense because you'll notice this big jump in revenue, right? From 2019 to 2020, they went from 1.4 billion to over 2.5 billion dollars. That's a big jump here for the company. That's over 60% growth year over year, and they also turned profitable. So prior to that, the revenues were pretty stable. In fact, they were kind of declining from 2018 to 2019, and this big pandemic helped them a lot in terms of the revenue. Now, is this going to continue? We have to wait and see. But share dilution's also been quite a bit, from 24 million to 42 million. P multiple at 20, price to sales at under 1 because the margins are so low. Price free cash flow at 21. So valuation's okay. It's not like super undervalued or super overvalued from these metrics. And current ratio is over 1.85. So that's good as well. Balance sheet, quick take. So cash to debt, very strong. And that makes sense for a lot of companies that you notice that don't have a lot of debt and have a lot of cash. Mostly a lot of these companies do get that cash amount from share dilution. And that's what's happened with Overstock as well, with them raising a lot of shares in order to raise more capital. So yeah, volatility definitely looks very confused, Kevin. I agree. It doesn't know where it wants to go right now. But QQQ is now really starting to see a breakout over this level as the volume also started to kicks in. And now we're green for the NASDAQ. So very nice move. Look at that. So that was the whole breakout that we looked at on the 5-minute chart. And the S&P obviously starting to move back higher. And another chart that I wanted to share with everybody that we've already gone over, QQQ divided by SPY, right? This is a relative performance chart that we've talked about, and how this chart has come down to its May 21st level, right? So if you come over to the daily chart, you'll notice that we've actually come down to that same level as May 21st. And this basically means that the NASDAQ was underperforming the S&P all during this time. So we saw a pullback of 10%, and same thing happened here, pullback of 10%. But if you compare that with the S&P 500 itself, this was May 21st. This is where we bottomed out for that dip, where this relative performance chart also bottomed out. And what happened for the months leading up to that, after that, following that, we saw 11% gain. And for the NASDAQ, we saw a rally of close to 30%. So just a little observation there, that on a relative basis, the NASDAQ has been very weak since November, right? So it's been November, December. It's been 4 months, 4+ months, where the NASDAQ has underperformed the SPY, similar to what we saw during this time. And this is usually the time when there's a lot of weakness and tech stocks continue to underperform, where I like to position myself more towards some of the tech companies because of what's happened in the past as well. So yeah, Facebook and PayPal pushing up a bit, so that's good. We'll go back to our 5-minute chart here. Yeah, I mean, lots of, it kind of felt like a bull flag too, right? And if you go back to our sentiment check, and when I asked you guys which way are we going to break out to, we kind of saw 50-50. I would say like it was more towards, Darren says down since Caddy's wearing red. So yeah, it was kind of like 50-50, or people were leaning more towards down. But sentiment obviously is the way it works is very crazy, right? Obviously we get drawn into the narrative and what's actually going on, instead of just looking at the fundamentals of what's going on in the business. And I'm the same way. Like I obviously, I need to kind of recalibrate sometimes and look at just the company and how they're doing. But it's difficult. It's tough sometimes, in this market. Obviously nobody's perfect, and emotions play a big role. And when you hear about these stories about, geopolitical tensions and recession fears and interest rates going higher, inflation getting higher, you definitely second guess yourself, right? You start to kind of, get in that mindset of, what's going on? Is that what do I have to, like, logically speaking, like, what do I have to do? So those are the times then that businesses fundamentals, that's what matters most in a nutshell, right? And a lot of it can be kind of chalked up as noise in the markets. So AMD is up nicely, 3%. Didn't expect AMD to be up just on this upgrade. Nvidia is now green, Tesla almost green, so pushing back over $850. And Palantir is just over $11 right now. So yeah, let's see where we are with this changes here in price. So what is up the most? So in terms of change, we've got DoorDash. So DoorDash is up the most, up over 5%. Then we got Workday up close to 5%. Okta also received an upgrade, right? So if you come over here, JP Morgan upgrades Okta to market perform. So it's pushing up close to 3.5% here. Rivian is up over 3.5% on the day right now. And then we got Infosys, Wipro, AMD we covered earlier. Let's see, we got Intuit, AstraZeneca, Micron Technology. So a lot of stocks up, anywhere between 1 to 3 to 4% right now. What is red? What is down the most at the moment? So red stocks, 20% fat brands. I don't know what that is. Alibaba down close to 5%, $113 is where it's trading at. Then Rocket Companies, RKT, a mortgage broker, down close to 5%. Home Depot on good earnings, pulling back. NetEase, XPeng is down. NEO's down a little bit over 3%, just over 22.50. Coinbase, because of Bitcoin, obviously is pulling back here. They report earnings later this week. And yeah, kind of like a mixed day so far. I mean, mostly tech has been pushing higher and doing well. All right, let's do a quick poll. I'm really interested to find out here. We may not do let's just see. Okay. So far, and today is February 22nd, this is the year-to-date chart that we're looking at. Energy is up, right? Energy is clearly winning, right? Up over 19%, and then followed by silver, gold, and then we got financials, flat, staples down 1.89%, and then all these sectors are down right here. So if you look at the chart on the right, all sectors are kind of like packed together, down anywhere between 6 to as high as 22%. This is including Ethereum and Bitcoin, by the way. Which sector do you think is going to come out on top at the end of 2022? Which sector do you think out of all of them? Is energy going to be the winner? Is energy going to stay up there throughout 2022? Or you guys think that one of these sectors is going to, at the end, last quarter, it's going to push higher and take over? Or is it going to be Bitcoin or Ethereum? What do you guys think? So I want to hear from you guys. This should be interesting. We should probably do like a poll, like an ongoing poll that we can kind of make a prediction and look at it. So energy right now is winning 19%, and all the other sectors are down. So all right, I'm getting a lot of Bitcoin. So Argel says Bitcoin, Abby says Bitcoin, Harry says gold. Very, very interesting. So we got healthcare. Okay, so we got a couple of gold, we got a few healthcares, Ethereum as well, and Bitcoin. So mostly Bitcoin, Ethereum, gold is what I'm hearing right now. Nobody expects Palantir on top. Somebody expects Palantir all the way up here. This is gonna be Palantir in 2022. Oh, M1 says love. That's good. I like that. That's interesting. So Freddy says weapons. Oh, I love it. You guys are amazing. But yeah, we'll kind of look at this once again and see how it's moving, and but I get, yeah, those are some great predictions here. But yeah, energy, we kind of started the same exact way in 2021, right? In 2021, I remember February and March, it was energy that was pushing higher, oil prices were going up, and all sectors were down. So if you come over here, you'll notice the Nasdaq. This was so March of 2021 was all the way back here. This was February. Wow, it's been that long, guys. This is where we were exactly a year ago. February 22nd, no way. February 22nd, the markets were down over 2.5%. This is February 22nd. This is when we actually started that drop for the markets. That circle, that red candle, was a drop of 2.5%, exactly 1 year ago. And this is when energy was also doing very well, right? So energy stocks were pushing higher. Meyer says ARC. That should be very interesting. If ARC ends up at the top of the board in 2022, oh man, that's going to be incredible. Incredible from like a sentiment standpoint, because it's just been a roller coaster for her, right? Everybody was like hailing Kathy Wood in 2021, and right now people are setting up short positions against her stocks. So it's been so much of a roller coaster. But this right here was the pullback, right? So 337 down to 297. We were down close to 12%, same time last year. And right now, once again, we're seeing a pullback. This time a little bit more longer and more brutal, to say the least, right? 17%. Yeah, ARC could come out on top if the Fed kicks the can down the road for interest rates, but I don't think they're going to do that because inflation is getting out of control. The only thesis holding her up right now is if we see some serious deflationary pressures coming in, and inflation on its own comes back down. That'll be a miracle. What will save ARC right now is inflation on its own comes down. And she's been talking about an inventory buildup, supply chain issues easing up for a long time. But is it going to play out? That's what we need to see. And SQQQ on top. That will be interesting too, because the Nasdaq would absolutely get destroyed in 2022 if that happens. But yeah, very, very nice breakout here. Volatility coming back down under 30, still up 4.7%. This is again the relative performance chart that we looked at. And then we got Bitcoin and Ethereum also pushing up over 3% each. So they're up exactly 3% right now. Both of them are. And the markets overall doing okay. Okay as in they are flat. S&P, Nasdaq, and Dow Jones are all flat. Dow Jones is pulling back because of Home Depot and Boeing. Home Depot is really dragging down the Dow. And the reason is because it's a price-weighted index, right? And Home Depot is the third most influential stock in the Dow, right? Even though Apple is the biggest company right now in the world, it doesn't quite affect the Dow Jones as much as Home Depot because it's a price-weighted index. So, UNH, then Goldman Sachs, then Home Depot, those affect the Dow most of the times. So big move here in Home Depot stock as a result, pulling back on the Dow. Yeah, I've kind of felt like kind of forgotten what green days actually feel like anymore, right? So in 2022 it's just been, I don't even know what green days feel like. It's mostly red. I just, we got to look at the markets. It's red, great. Yeah, Jonathan says the calm before the storm. Wouldn't be shocked if the markets went very red later today. If you look at some of the global indices, so like, we already talked about the Russian markets here. So the Russian index, I gotta find that again. Was this one, I think. Wow, this one's also getting bought up here. So this Russian index up over 2.5%. The last time we checked, it was down, close to over 10%. Is that right? Yeah, I was trading at roughly at 1,075. There's been a lot of buyers step in. Wow, that market's really volatile. 15% in one day from bottom to peak here. And getting bought up, it's now in the green, 2.5%. So very, very nicely. But still down 22% year to date. So year to date, this market has obviously taken a big hit. From highs of 1940, it was down over 44%. So, very, very strong move to the downside for them. Yes, so Waleed, thank you so much. I will definitely take a look at that, and we'll do some more analysis on some of the value stocks. And again, videos on 3M, videos on AbbVie, videos on Lockheed Martin will be coming out as well. Although I have analyzed Lockheed Martin in the past, so we'll do some more analysis on these in the future. All right, guys, so we're probably going to call it there. Again, thank you so much for joining. I really, really appreciate each and every one of you guys. Make sure that you drop a like. It only takes 1 second. Just drop a like here and subscribe. This video will get out to other people as well. But thank you so much for joining. Really appreciate it. I'll get more videos out for individual company analysis, doing some fair value calculations and price targets as well. And so far the markets are, I would say, like okay. They're not great. They're obviously not too bad right now, just on the day speaking. But obviously 2022 has been nothing but painful for the markets right now. But again, thank you so much for joining. I really appreciate it. And we'll take a look at some of the economic stuff that comes out in March. Of course, unemployment, inflation, interest rates, the FOMC meeting. But later this week, we've got the GDP numbers, we've got the personal consumption expenditure, the savings rate, and the income levels. And later today, probably right now, we got the consumer confidence that might affect the markets a little bit, but not that much. So once again, thank you so much for joining, and make sure that you do check out the links down in the description below, especially the Patreon link. If you still want to join, we are going to be closing up the early bird forever after February. So if you want to join and be a part of our Discord, the link is going to be down in the description below. So again, thank you so much, you guys. Appreciate it. Hope you guys have a great green day. And as always, happy investing. And I'll see you guys in the next live stream.